Today, Kenya's economy is at the center of a major debate after the government confirmed plans to sell part of its stake in Safaricom, the country's most profitable and influential company. The move, described as one of the biggest privatization steps in nearly 2 decades, is aimed at raising much-needed cash to fund development projects, but it has also sparked strong reactions across the country. Safaricom is Kenya's largest telecommunications company and a backbone of the economy, powering mobile communication, internet services, and the popular mobile money platform M-Pesa. Currently, the Kenyan government owns a significant stake in the company. Under the new plan, the state intends to sell about 15% of its shares, mainly to existing shareholder Vodacom, reducing direct government ownership while raising billions of shillings in revenue. According to officials, the sale is part of a broader strategy to unlock capital for infrastructure, debt repayment, and economic growth. The funds raised are expected to support key sectors such as roads, energy, housing, and digital infrastructure. Government leaders argue that selling part of the stake does not mean losing control of Safaricom, but rather restructuring ownership to strengthen public finances. Kenya is currently facing heavy public debt obligations and rising development costs. By selling part of its Safaricom stake, the government hopes to reduce borrowing, stabilize the economy, and free up funds for priority projects without increasing taxes. Officials insist that this approach is more sustainable than taking new loans, especially at a time of global economic uncertainty. However, the proposal has triggered widespread debate. Critics argue that Safaricom is a national crown jewel and that selling government shares could reduce long-term public revenue. Others worry about increased foreign influence in a company that controls critical communication and financial infrastructure. Supporters, on the other hand, say the sale is a practical move to unlock value and keep the economy moving. For ordinary Kenyans, the government says there will be no immediate changes to Safaricom services, M-Pesa operations, or pricing. The bigger question remains whether the money raised will be used transparently and effectively to improve infrastructure, create jobs, and ease the cost of living. As Kenya moves forward with this historic privatization plan, the Safaricom stake sale is set to remain a hot political and economic topic. Whether it becomes a smart financial decision or a costly gamble will depend on how the proceeds are managed and how the deal is implemented in the coming months.